Has Chair Powell lost his credibility? Markets keep making new highs. What's up, everybody? Welcome aboard to Bubba's Bottom Line. It's Bubba, fresh back from Las Vegas on a flight that was 3 hours delayed that got in at 4 o'clock this morning. And I'm too old for these overnighters anymore, but here we are. I had a great time in Las Vegas, worked hard, but played hard as well, and managed to leave Vegas with a little bit of their cash. But in the meantime, here we are. And of course, the whole week was dedicated to Chair Powell, which we'll also talk about in our commentary. But equities continue to make new highs, which we'll get to in our market commentary. But there's a lot going on, and of course, I think you're seeing, first of all, you've got so many divisive people out there, especially on the left side of the aisle. Alyssa Milano discussing, comparing Vice President Pence to Himmler. Are you kidding me? This is how far and how bad we've gotten in this country. It's actually a joke. It's a joke watching AOC and these morons go at it. But again, it is what it is. So we're not going to waste any more time discussing it. But I thought those were interesting highlights or lowlights of the week, along with, of course, Jeffrey Epstein, who should be in jail already and is not. And hopefully he'll go directly to jail, and we'll take care of that too. Because again, anytime you abuse anybody, but especially children, that should tell you that you should be immediately, again, I can't say it, but I think everybody gets the drift of where I would be with this whole thing. But in the meantime, okay, we've got economic data that is slowing down. Okay, but yet markets make highs. You've got the start of earnings season this week. Now, once again, they have magically and systematically made earnings season. They've lowered the expectations so low that they might be underground right now. I mean, you might be able to crawl over the expectations. So, what does that mean? Well, it means more than likely, okay, more than likely, they're going to beat earnings. Because again, when you continue to lower expectations, okay, anything could be a positive surprise, not a negative surprise. So I don't expect to see any real negatives here. Now again, I'm sure there'll be the occasional surprise, but when you bring down expectations, like we've used the example before, I believe, but it's, somebody tells you how great a restaurant is or how great a movie is, okay, you can only be disappointed. When everybody tells you how bad everything is or how bad everything's going to be, you can only be pleasantly surprised. So not only are we going higher, but of course you've got beaten down expectations that are there, okay, that say, okay, that it's going to be hard not to beat them, okay. This is like the Harlem Globetrotters playing the Washington Generals. It would be hard for them to lose. It'll be hard for earnings not to make it because of what they've done with expectations. Of course, I think one of the things you're seeing is the hedge against idiocy of the political cycle. You've got people racing into gold. And again, I think gold, we've been long gold, right? I mean, again, this is not, but I think we make a big mistake. If you think that gold is going to hedge your equity portfolio, you better think again, okay? Again, I'm a big believer in gold. I'm a big believer as a hard asset. But, again, if you're trying to play A, the news cycle, and B, the political cycle, you may be better off going to see a doctor, because you're not going to be able to play it. It doesn't work that way, okay? But there are so many things going on, and again, we see, okay, that there's we'll call it the retail. Well, it's not original, but the retail apocalypse, okay? So you've got about 12,000 retailers that are going to close this year worldwide. Again, I think that is something that says to you that that's a problem, okay? Now, again, we can continue to ignore potential problems, okay? And remember, equities or markets and the general economy are really not related. So let's not confuse the relationship between the two. I think this is one of the things that many try to do, and they try to compare based on what's going on in the economy versus what's going on in the markets. And I think that's a very dramatic mistake that many make. But you're seeing, okay, a lot of the numbers and reports that are not good. You're seeing a lot of reasons to believe, but yet the markets don't go down. So I think the retail apocalypse is going to be big. I think that, again, I go back to this ridiculous inflation target, okay, that the Fed is after, the 2%, and I can't see where it's not there, okay. Now again, I never understood why food and energy don't count in the reports. You know, it's always, if you have ever noticed, it's always X energy, X food. They take them out of the equation. Well, but isn't that the thing we use every day? Isn't it the thing, you know, if more importantly, okay, for farmers, okay, their fuel costs and their fertilizer costs and their overall inputs continue to go up. So how can we say that we are not in, and again, we're not in hyperinflation, but prices are going up, salaries are going up, okay? So where do they not see this 2% or whatever ridiculous number they're looking at? This goes back to the ignorance of what they do in the first place, which again, we'll address more of this in our commentary later. But another thing that we're seeing is traders and investors are dumping their overall hedges against their portfolios, knowing that the markets can only go higher, and that's about as dumb as you can be, okay? Yeah, you can time it right for a day, for a minute, for a week, but at the end of the day, you know, one thing we do know is markets don't announce themselves, okay? And you know, I think that we see, okay, that, you know, at any time, okay, there can be a breakdown. Now, if you don't think that there are warning signs out there right now, and again, it shouldn't change what you're trading. I mean, we're long, right? We've been long since, you know, for quite a while now. Okay, now I don't necessarily agree with it, but that's what the algorithms say. So why would I want to fight that? But at the end of the day, I'm not getting out until it's time to get out. And the time I will get out is when the algorithms are changed. Because again, you cannot try to time, you know, for a given day or a given trade, sure, you can time out a trade, but for over what's going to happen, you cannot time it. So again, why would you dump your hedges that protect you just in case? Okay, that would be known in the cycle of greed. Okay, so remember that, you know, again, when greed starts to take over, okay, that's always an issue. Okay, greed is part of that magical mystery, okay, out there, which the same as what happens with fear. Okay, we have these things happen all the time. This is not the first time we're seeing action like this. Okay, it usually is under a different circumstance. But if you don't think, I mean, I personally believe that there's going to be another liquidity crisis. I personally believe that the banks are not nearly as strong as they say they are. Okay, I personally believe that you're seeing a lot of these loans going to be packaged again. And I think that is indeed some of the issues that we're going to have to deal with. Again, do we have to deal with tomorrow? I doubt it. Is it 6 months from now? I don't know. Is it a year from now? I don't know. I don't know when it's going to happen, but there are certainly, you know, if we go back just in time for a moment, in 2008, there were some crazy things happening in January, and one being with, believe it or not, the wheat markets. But the Badger and I, who the Badger, if you don't know, is my partner, okay? And we talked about it, and we go, something's funny about this. And wheat went crazy. I don't know, again, Minneapolis wheat traded like over 20 cents. Okay, it was unbelievable. But it was like a sign that there was something wrong. And you're seeing the final stages. And again, we're not going to predict what's next, but you're seeing a bunch of things. When you start seeing enough things that don't make sense in the overall picture, that is just, again, these are warning signs that are laid out there. It's no different than you're in a relationship with somebody. Relationships just don't end on one day. There are warning signs that people tend to ignore. Okay. And I think that is something that we need to always address. Is, again, it doesn't mean you're going to change your position at this time, but what it says is in the back of your mind, you're aware that there is some changing going on. There are things to be concerned about. And that we don't want to predict markets. When they ask me on TV, what's my numbers? What do I call? And I go, I really can't call it. I might give you what I think over X amount of time, where I think we should go, but it doesn't mean we're going there today, tomorrow. And just because I do believe, I'm the cowardly lion. I do believe that we are in the early stages of a recession. I'm not being shy about that. I've made that clear on every major network I've been on. But I do also tell you that doesn't necessarily mean that the markets are going to go down right now. It doesn't mean that anything's going to dramatically change because, of course, as always, we will ignore that cycle until, of course, it's too late. Okay? So I think these are things that we look at, and just an interesting factoid, okay? The new Democratic mayor, okay, just bans ICE from their police database. Now, I live in Chicago, and of course, we're a sanctuary city. God knows why. But of course, they don't want ICE raiding and taking care of the illegal criminals that shouldn't be here in the first place. Okay, so I think there's obviously a huge disconnect out there. And of course, these could be part of the problems that will also create problems in the economy as well. Don't kid yourself that none of this is not somewhat related. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horwitz, fresh. Well, I don't know how fresh I am, but back from Vegas, okay, after an overnighter, an all-nighter, which I wasn't anticipating because I'm too old for it. But we're going to step out here for a break, and we'll be back with more of Bubba's Bottom Line after the break. This is Bubba's Bottom Line. We'll be right back. What's up, all? Hey, if you missed the equity portfolio webinar, I'm doing another one live on Saturday coming, which will be that'd be the 21st, the 20th. If you want to join it live, feel free to tune in. If you want to get the recording ahead of time, just all you do is email me at bubba@bubbatrading.com. But we're going to go ahead and fire it up, and we're kicking ass. Okay, the portfolios have been unbelievable, and again, I anticipate them being unbelievable. Of course, we always know that there's always that risk of a drawdown. But if you want to get a hold of it, bubba@bubbatrading.com. And of course, we've got the same thing for futures, which has been awesome. But also, if you'd like to help us with our high school program, that's Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line. Welcome back, everybody. This is Todd Bubba Horwitz, back from Vegas, a little tired, but here we are. And of course, I did trade from the pool in the cabana all last week, and surprise, markets made new highs every day. It's a moonshot. Again, who knows when we're going to go down? I mean, again, we're long. Listen, our positions as it stands today, okay, we're long the equities, we're long oil. We just sold bonds on Friday. Okay, we got short bonds. Okay, we're going to be long corn going in tomorrow. We're long soybeans. We're long wheat. Okay, we're long gold. Okay, again, that's what the algorithms say. Okay, and we're long the dollar, the U.S. dollar. So that's what the algorithms say. That's what we're going to do. We're not going to fight them. So yes, the market's continuing to make new highs. So yes, it's very good for what our positions happen to be. But again, we don't predict. We use math to make the decision, because again, markets are very efficient at pricing in. So here we are. New highs every day. And again, there will be, at this point, I will guarantee this week, one day or 2 days, or it could be tomorrow, could be Monday, could be Tuesday, could be Wednesday. I don't know when. But this week there will be a down day, and it'll be probably a healthy down day. But that doesn't mean that the rally is over. It just means that some people actually in this business want to take profit. Okay, so you might see some selling. Okay, and typically when you see profit taking, you also see a shakeout of some of the weak hands. Okay, the ones that are trying to ride the momentum coattails. Okay, so profit taking comes in, and then the weak hands get nervous, and they. But again, right now, we are probably 3% lower from a reversal in our algorithms. So again, we've been long forever. I'm not going to get out now, and I'm not going to try to guess and say, okay, this is the top. And I think this is a mistake that many make, is trying to predict. If you own something, why not let it trade? And if you want to protect profit, why not set stops below and let the stops follow up instead of trying to predict exactly where it's going to go? Nobody knows exactly how low when they're going down or how high they can go. So equities continue to make new highs. The only one that's not is the Russell, which is a little bit of a concern. Typically, the Russell is a leader in the market. Typically, the Russell is the index that tells us if we're really on a risk-on environment. But certainly, the Russell could reverse and catch up, or the others will reverse and come back down. Right now, I mean, again, right now, I'd have to say that the Russell's probably going to catch up, but at least for now, it's up we go. Okay. Now, bonds have started to sell off a little bit because, now this is a perfect example of what we talk about often a lot on the daily updates, on Bubba's Bottom Line, on my calls, is that, okay, the news is now out. Okay, we now know what the Fed and Chair Powell are going to do. Okay, so again, you would expect to see the markets come back a little bit. Remember, going into news, they spike volatility typically. They try to spike price. They try to figure out which way it's going to go. And then after it's over, the markets then resume and settle down. Well, in this case, in the bond markets, they have settled enough down to make us short the 30-year and long the 10-year. Okay, still. But again, the news is out. So what surprises are out there? Gold continues to hold and making nice movements. There was a number of attempts last week to push it down, and sure enough, here it came charging back up again. So again, remember, if you remember the movie Trading Places and the Duke brothers, they go, that can't be right. Well, remember this, the markets are always right, okay? So whatever they're doing, they are right. So gold had cut a couple of pullbacks trying to break it, and they couldn't break it. Every article I wrote for Kitco this week was, look to buy support. It looks like it wants to go higher, okay? Oil, look, I'm long oil. I hate it, okay? But it's higher, so why would I think that I'm smarter than the algorithm? So we had a big breakout on Friday, okay? And we're now over that 60 level, okay? And again, can we go higher? Sure, we can go higher. Again, I'm never going to tell you that it can't go either lower or higher. The only time I can tell you it can't go lower if it gets to zero, okay? But right now, I can't tell you it's not going to go higher. Now, I still expect, okay, at some point this year, we'll be back in the 40s in crude oil. But right now, is it really my job or your job to get in the middle of this market and say, you can't go up anymore? Now, that would be kind of silly, all right, to try to stop the market. Listen, I've done it before. I've done it with my face, right? It's like trying to kiss a Mack truck coming 65 miles an hour down an expressway, okay? There's no reason, you have no benefit to try to pick the top, okay? Because at the end of the day, if you do pick the top, you'll take profits far too early, okay? Instead of letting it ride and going for the home run. You'll take a potential single when you could take a home run, okay? So grain markets look really solid, okay? Again, we've talked about this. We're long grains. We're looking to buy more. We might have missed an opportunity to buy them last week when they were a little bit depressed. I'm not so sure yet. I still believe there's another little bit of a smash down. Now again, when I say smash down, 15, 20 cents, something like that, that'll bring us down to a level support. But again, we have been long and bullish grains. I mean, corn, I said live on TV when it hit 342, whatever it was, you got to be a buyer. You can't be a seller here. So again, look great, okay? All of a sudden, the cattle markets have started to pick up, as we've continued to say. Again, it's recognizing, okay, when something can no longer go down. Now again, there's no rule that says it can't go down, but when the price action suggests that it can no longer go down, and what you saw is you saw a number of attempts to break down both fats or live cattle and feeder cattle, and they couldn't get it to break, okay? So what happens is typically you get a recovery. Now this recovery was extra bullish in the meats. Why? Because it didn't spike up in one day and go up limit after being down. It's grinding its way through and building a strong bottom. Okay, so that tells me that we have substantially higher prices to come. Now I know that feeders were down a little bit on Friday, the high price of corn, but again, that resolves itself. Don't let those two things confuse you in the bigger picture. Okay, that's a lot of a short-term reaction, but they look great. Now again, hogs have tried to break out. Now we're still sellers here, but it's getting closer. If they can build a base up in these levels, then we might have to reevaluate. But again, we're not afraid to be wrong. We're not afraid to have to reevaluate a trade and say, okay, well, we'll get to the other side of the market. But right now, we'd still be a seller of hogs, okay, because that's what the pattern looks like. Remember, 2 months ago, we were at 100. Now we're at 80. So we're down 20%, and we're just holding. We're not exactly charging back forward. So we're still sellers of rallies until it's different. Now, again, we've been very bullish the dollar, and then we had to get bearish the dollar for a little bit, and we've now reversed back to the bullish side. But I don't know if we're going to see, I still believe there will be par at some point, but I was pretty confident we might see par by the summer. By the end of summer, I don't know that we'll get there now. We are long, and we are bullish it now, but again, I don't know that we can see enough here. There's too much dollar manipulation. There's too many things going on with people trying to dictate what the dollar should be doing. And I think that's always an issue that we have to look at. But I am happy for my grains people, my farmers and producers that held in the bins, and are now able to now liquidate or at least hedge some of the stuff you got so you can lock in a much higher basis. So that was, as I always say, okay, if you can store for no cost, in other words, you can store on your own land without paying, then it's great that you go ahead and store. Because again, at corn 350, I'm not interested. To me, it's like putting money in the bank. Okay, I'll put it in the bins instead. So congratulations to those who held. Congratulations to those who held soybeans. Okay, again, yes, I know we have an oversupply. I know there might have been some damage, but at the end of the day, okay, you were able to sell or at least hedge at much higher prices. So that's a great thing. Okay, and I'm really happy for all you. Again, markets look like they want to go higher. I'm not going to tell you to get in the way of them. I give you exactly what our positions are without an opinion, okay? Because, again, at the end of the day, my opinion is good, but long-term trades are built on a trend and built on an algorithm, which is what we build it on. So that's more important to you because we want to hit, there's certain trades we make for singles. We make trades for home runs. The algorithm trades are for home runs. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horwitz back from Vegas. An all-nighter. Old man, tired. All right. In the meantime, we're going to step out here for break, and we're going to come back with my commentary on Bubba's Bottom Line. We'll be right back. Hey, y'all. Yeah, next Saturday on July the 20th at noon Eastern Time, I'll be doing another Futures Portfolio webinar, and we are kicking ass and taking names. They've been really good. Okay. We're running 9 different portfolios, but we're actually cutting down to 4. We're just closing out. But in the meantime, out of the 9, 7 are up big and 2 were flat to a little bit lower last week. But really solid information and solid stuff. But again, it's just straight math. It's all mechanical. So if you want to check out the webinar, just to either go to bubbatrading.com. The link will be posted either today or tomorrow. Or you can email me for the recording of the last one, or you can get the sign up for the new one. Whatever you'd like to do, please feel free to reach out. And of course, if you'd like to help us with our high school program, go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with me, the tired old man. Should just get off the boat, just get off the plane. We'll get back to Bubba's Bottom Line. Welcome back, everybody. This is Todd Bubba Horwitz. It is Bubba's Bottom Line. And of course, every week I give you my commentary, and I've got something I could comment on. But I am tired of battling with the idiots about certain things, which I'm sure that you out there can figure out what I'm tired of battling about. But in the meantime, let's talk about the Fed and what's going on there. Okay. So Chair Powell caved. It's as plain as it knows on our face. Again, he testified on the Hill last week. And it's the same old story. Inflation, which I don't give a crap what he says. We got inflation, okay? And the other guy, Evans, again, we need more anticipated inflation. I don't know. I'm paying a lot more money for everything, okay? So I don't know where they can't find it, but maybe if they look up, they put their head where the sun don't shine, maybe they find what they're looking for. I don't know. But in the meantime, now they want to cut rates again. And of course, the question is do they cut 25 basis points in July, which is about 2 weeks from now, or maybe sooner, about 2 weeks, or I think it's 2 weeks from Tuesday, okay, or it'll be 2 weeks from Wednesday, or do they cut 50 basis points? The question of whether they cut or not is off the table. They are cutting, okay? So, and the question is why? You have an extremely strong economy, okay? So why are you cutting rates, okay? It makes no sense, and especially, okay, if you believe in the Federal Reserve and what they do, which I do not, so let's be clear, I'm not a fan of the Fed to begin with, okay? I'm not a fan of destroying my dollars. I'm not a fan of having somebody manipulate a fiat currency, okay? So I'm not a big fan in general, okay? So, but let's just say that everything they do is fine, okay? Why would you give up the tools in your toolkit when the markets are at record highs, okay? That is the most illogical, and from these highly educated, very smart, from a book standpoint, okay? Obviously, as we've said thousands of times, they have absolutely no common sense. But from a book standpoint, these are highly educated, very smart people that want to cut rates into a market that is at all-time highs. The economy is supposed to be percolating along. Full employment. Everything is as perfect as it can be. And as you continue to hear people on TV, the pundits talk about, it's the Goldilocks scenario. It's just right. So why are they cutting rates? Because what's really going to happen is they are going to cut them. But when they cut them, if we do go into a problem, okay, they're giving up their toolbox, which means that we will be at negative rates as well, okay, if this continues, okay? If we break down and if they start to cut now, okay, we will be at negative rates someday. Now, Japan, okay, and Germany have proved that that doesn't work, okay? You cannot survive, you cannot flourish at negative rates because people are not, they're not going to put the money into circulation because why would you put your money in at negative rates, number one? And it doesn't help the borrowing because the spread becomes wider for the banks because you're not borrowing at negative rates, okay? They're not paying you to borrow money from them. So again, the Fed is laughable, okay? Chair Powell choked to the pressure of the markets, very similar to what Ben Bernanke did in 2013, May of 2013, with the taper tantrum, okay? Which is why the Federal Reserve should not be able to do things that are illogical and don't make sense, okay? Again, you save those rate cuts for when you really need them. Again, I wasn't a big fan of what they did in 2008. Me personally, I'd let the banks go bust. Okay, me personally, I'd have bailed out the depositors. Let's let new banks come in, and see if they can be smart enough not to overlend all this bad money. But again, that's just my opinion. Okay. But in the meantime, I think we got inflation. At least I know I do. Okay. Lowering rates is as dumb as you can get here, in my opinion. Okay. So to me, they're a worthless organization that has absolutely no clue and don't want the true free markets. This is Bubba's Bottom Line. Have a great rest of your weekend, everybody. It's always great to be with you. We'll see you back here tomorrow with Bubba's Daily Update. Have a great weekend, everybody. Thanks so much. We'll see you later.